All right, good afternoon, everybody. It is April 18th, 2023. It is 9:01 p.m. live here from New York City. Yes, we are live again at Columbus Circle, 59th Street. Now, I got to warn you guys, okay? Well, first of all, let me apologize for being late. I'm about 30 minutes late. What the heck? I was busy. I was running late at work. You know, for some reason, it always seems to be the days that you're like, you know what? I may finish all of my work early today. It was quiet throughout the entire afternoon. And then just as you're about to leave the office, bam, you get clocked with clients. Everybody calls you at the same time. Your boss needs this and that and the other thing. And it's, anyway. Well, guys, it's 48 degrees Fahrenheit. It is freezing. Now, I know what you're thinking. 48 degrees is not that cold. But it's windy. It's really, really windy. The wind is howling here. So I got my jacket on. I forgot to bring my hat, but hopefully we won't need it. Hopefully it won't be too bad. Now, tonight we're actually going to switch up the topic of the stream. I know before we ended the live stream, right before we ended the live stream yesterday, I said we were going to talk about the US, Canada, and Mexico and our bull thesis for North America in general, as opposed to potentially our bear thesis and contrarian thesis to a lot of people on Wall Street and on Main Street saying that China is going to take over as the main superpower as well as Russia. I'm going to put that on hold mainly because it's just a busy day of earnings today. We had Bank of America reporting, and I think it's very important that we do a deep dive there. Netflix reported. I think it's going to be important to also do a deep dive there as well. And we also got additional housing data out today. We had housing starts. Specifically, I want to talk about single-family housing starts, so single-family home starts, as it relates to the specific regions in the United States. Now, there's four main regions, right? You have the Northeast, you have the Midwest, you have the South, and then you have the West. So I want everybody to remember our conversation when we were talking about existing home sales, which we're actually going to get out on Friday, I think. The National Association of Realtors is going to report existing home sales for the month. And we've been seeing this very, very interesting trend of a huge sort of bifurcated market, right? I mean, we're starting to see the Northeast pick up in transaction volume. The South is holding strong in terms of existing home sales, as well as the Midwest, but we're really not seeing the West participate in any of that activity. If anything, we're seeing it go backwards in terms of existing home sales slowing down and home prices falling. So we're going to talk a little bit about that. What else? We're going to talk about the bond market. I think that's important. We've been seeing some very interesting movements there. And then we are going to talk about the breaking news. Now, I think Fox News or News Corporation, this actually just hit my Bloomberg screen a few minutes before I started the live stream. I believe they have reached a settlement with the Dominion thing, with all the election misinformation. Does anybody remember that big story? It's going to be a $787 million settlement. That's huge. So we'll briefly talk about that, and then we'll maybe touch base on Wingstop and the like. Guys, let's quickly take a look at the S&P 500. I want to bring everybody's attention to the closing price today. The S&P 500 closed at 4,154. It's a very key level because if we think back to February, specifically February 2nd, the S&P 500 hit an intermediate term swing high at 4,180, and then we've declined ever since to about March 13th, and then we've rallied back to that level. So I think we could probably see some resistance here. I wouldn't be surprised if the S&P 500 gives a little bit back. You know, we did finish in the green today on the S&P, but we were only up about 3 points. And if you noticed where we closed, we almost closed at the dead low of the day. So a pretty big reversal there. We'll take a quick peek at crude oil futures, as we were talking about that yesterday. Crude actually a little bit lower on the day, closing at $80. All right, guys, without further ado, I'm going to close up my laptop here. I still got the briefcase, so bear with me. And let's head downtown. And hopefully tomorrow's Wednesday, already the middle of the week, who knows, maybe we'll be able to go to Lower Manhattan, check out the New York Stock Exchange and Stone Street. Glass of Beer 12, good to see you. Thank you for joining us. I see Gary Carpenter. Paul Greenwell is here. Kimmy G. Yeah, so Kimmy G says prayers for everybody in New York affected in the garage accident. Now, I saw that briefly. I actually think one of my buddies texted me about it. Hold on, let me situate myself here. I'm not used to carrying around the briefcase. But I guess, and I saw a little bit of footage on Twitter, I think it was in Lower Manhattan. Is that correct? Maybe some of you guys could keep me honest here. But in Lower Manhattan, there was a really tragic parking garage collapse. And there was some footage of it. And it was almost, man, it looked like one of my worst nightmares. Now, some people are afraid of heights. Some people are afraid of flying. Some people are afraid of the water and the ocean, swimming. If I do have one phobia of anything, it's being buried alive and being crushed to death. And I worked in a parking garage actually for many years. I'm not sure if you guys knew this. Many of you did. When I was a teenager, one of my part-time jobs, and let me tell you, I'm no engineer. I'm not a structural engineer or anything like that. But a lot of these parking garages are old. A lot of these buildings are extremely old. I remember, hearing the floors and the walls creaking when I worked in the big parking garages. So it's horrible. Hopefully nobody died. I think there were some injuries, but I don't know if anybody died. Anyway, hey, Joe Driver is here. Good to see you, Joe. Thanks for joining us. Gigi NYC is here. What's up, Gigi? Thanks for joining us. Who else do we have? I see Teresa Diaz, welcome. Gary Carpenter, British Grey. Robert is here. The ABX girl, always a pleasure to see you. ABX girl from the Bronx. And Lila is here. All right, let's cross the street here. It's so windy. I think the police are here. There was a little bit of a protest. I'm not sure if you guys could see it. For some reason, there's a bunch of barricades around this particular statue here, Columbus Circle. There was some protests. I don't even know what the people were yelling about, but anyway, they were yelling about something. So I guess we'll start off the stream. I think we're going to walk down Broadway tonight. I want to show you guys where they filmed the Late Show with Stephen Colbert. We haven't been down there in a while. And hopefully as we walk down Broadway, we'll be able to get out of the wind. At least all but hopefully. And look at all the police officers. Maybe they were expecting to be some sort of a big protest. There was only about maybe 20 or 30 people. Anyway. Jimmy Boyle says one person is dead and multiple people injured in the parking garage collapse in Lower Manhattan. That's horrible, man. That's really, really sad. I mean, man. Hey, Teresa Diaz, thank you so much for your very kind $5 donation. Oh yeah, Teresa Diaz's happy 2-year anniversary of the live stream. Now, I appreciate that a lot. Now, I will say this. I think we created the channel. This is kind of cool looking at all the police officers on the Vespas. Now, I created the channel Walks on Wall Street about 2 years ago to this day, but I don't think I started live streaming until about May, maybe later May, or maybe June. But anyway, I really appreciate that, TD. It's been a really fun and really wild ride. I very much enjoy doing it. I've met a lot of interesting people, and I enjoy talking with all of you each night as we walk the streets in New York City and Miami and talk about the financial markets. So I think we'll start off just by quickly mentioning single-family housing starts. So we got housing starts in general, that data that came out. Now, if you remember last night's live stream, we pretty much spent the vast majority of the time talking about the National Association of Home Builders Housing Market Index. Okay? And we've actually saw some good news. We've been seeing some improvement there. So for 4 straight months in a row, we've been seeing an improvement in the reading. Now, just as a quick refresher, that index is on a scale of 0 to 100. So generally speaking, a reading above 50 signals positive sentiment for home builders, and a reading below 50 signals a negative sentiment and outlook for home builders. But as we know, it's more important really to look at the trajectory of those numbers. Here we are on 57th Street. If you look all the way down 57th Street, you'll be able to see 432 Park Avenue. But what's more important is looking at the trajectory of those numbers, right? So in December, I think we bottomed at 38. And then last month, we got a reading of 45. So things are moving in the right direction. Now, if you look at the housing starts that came out today, specifically in the single family sector or single family homes, one of the things that you'll see is this massive trend of the Northeast remaining strong, or I should say recovering, the Midwest continuing to outperform, and the South is starting to cool a little bit. But that's to be expected, right? Because I mean, throughout the pandemic, you've just seen a massive boom in the South, particularly in Florida. But even so, housing starts were up about 4.8% in the South. But guys, check this out. In the West, it was down 16%. Housing starts were down 16% in the West. So you think about states like California and the like, and pretty much everywhere else across the United States in those four main categories, right? You think about the Northeast, the Midwest, the South, and the West. Everything was positive except the West. Now, I think we have a lot of viewers from California. And my question to you guys would be, if there could be maybe one or two catalysts, right? Maybe one or two things that you could, point a finger to say, this is why maybe we're seeing an exodus from people on the West Coast moving to the Midwest or the South or even the Northeast. What would a couple of those things be in your view? I think I have my interesting maybe suppositions, but I'm more interested in what you guys have to say. Hey, Matthew M is here. Good to see you. I see Ryan Beck. Welcome, Ryan. Thank you so much for being here. Jenny Trickett, good to see you. War Walker, speaking of Florida, War Walker is joining us from Miami. Always a pleasure to see you. Steph UH is here. Ryan Beck says taxes, safety, cost in general. Yeah, so maybe lower cost of living. Ryan, did you see I was watching CNBC and they put up a chart of the purchasing power of $100,000 salary in different cities across the United States. Now, they were comparing San Francisco, Miami, what was the other one? New York, Boston, Washington, D.C., and a few others. I think Austin, Texas. Austin, Texas actually is getting pretty expensive now. And look, I don't know how. Again, I don't want to get too deep into it, but essentially, the purchasing power of $100,000 salary in New York is equivalent to that of $36,000 in the Midwest, which is kind of crazy. Now, obviously, it's because rents are so high, taxes are so high in general. So if you make $100,000 in New York, it's essentially just like making 36 somewhere else in terms of what you could buy, where you could live. Dan Zhang says, Tom, do you think the password sharing crackdown is helping or hurting Netflix? Well, that's a really good point. So to Dan Zhang's point, and this is the Late Show right here, Late Show with Stephen Colbert. Man, it is freezing today. I'm shivering. I gotta warm up. As we walk the city, we'll probably warm up. But to Dan Zhang's point, Netflix reported earnings today after the bell. Now, here's the crazy thing. The moment they released their earnings report, I think the stock was down 10%. Is that correct? But then as the conference call went on, the stock started to rally back, and I think we're about flat. So I didn't check the stock price right before we started streaming, but I think the stock is back to flat. And the earnings report to me was very troubling. And the reason why I say that, the reason why I think the report was very troubling is because it's a very crowded market. Streaming is a very, very crowded market. And we've had many conversations to this. But to Dan Zhang's point, one of the reasons why Netflix is losing so much money is because over 40% of all of their customers share accounts. Now, I guess I'll ask the chat here, the group, out of all the people in the chat who have Netflix or who pay for a subscription service of Netflix, do you share your Netflix account with family or friends or anything like that? Because if Netflix is giving us the numbers, and I'm pretty sure they're accurate and appropriate, over 50%, I think it's over 40% of all of their users share accounts. So they've been doing a lot of things to crack down. Now, I don't think they rolled out the password sharing crackdown just yet in the United States. They have rolled it out in some other countries, but their main initiative now to try to generate more revenue is to lower the prices of the subscription by adding in advertising, right? So instead of paying for a full-blown Netflix account, you can pay for a cheaper subscription of an advertising supported service. So Netflix, I believe, is $6.99 if you get the advertising supported version. Is that right? So you pay $6.99, you save a little bit of money, but then you have to watch advertising. But Keith says, yes, I share with my family. Austin City Limits says, yes, I share. GG says, I used to share with friends, but now we're splitting the costs. Justin S says, no Netflix, but have other streaming services I share the password with. Robert says, I only have Discovery Plus. Steffi H says, I share with my sons. So yeah, almost everybody shares. Justin S says, I canceled Netflix years ago, though. Now, it's interesting. Let me see what Dan Zhang says. Dan says, Tom, I have two devices accounts, but I feel like it's a bit expensive now when you could get Peacock, Paramount Plus, or Discovery Plus for just $5 a month. Yeah, I mean, that's sort of, like, I don't own the stock, right? But a lot of people made a lot of money buying the dip in Netflix. However, this could just be a big bear market rally in the stock. And I just think that there's too much competition. Now, for everybody watching the live stream right now, think about all of the chats that just went by, right? So we had about, probably a dozen people that just put in the chat that they, number one, share their subscription, right? Which Netflix is actually trying to cut down on right now. This is the Sheraton Hotel across the street. Really nice hotel here in New York, really beautiful. But number two, there's so much competition. I mean, think about we just named a couple, Discovery Plus, Peacock, but there's probably multiple others. I think you have Disney Plus now. And if anything, it's going to be good for consumers, right? Because anytime you have a first mover advantage, right? And we talked about this with Amazon. So Amazon had the first mover advantage in cloud computing, and then came, Microsoft Azure Cloud, then came Google Cloud and the like. And Netflix obviously had first mover advantage in terms of streaming service. But then everybody starts to pile on the gravy train, and what that does is it's actually good for consumers in the long run because it drives costs significantly lower, and it gives consumers tons of choice in terms of the shows and the different programming that they choose to watch. But from an investor standpoint and from the company standpoint, there's going to be a lot of cannibalization, right? Now, we talked about that Investors Business Daily article, and I think this came out like 4 months ago. Now, Investors Business Daily did a study, and the average American household has 4 to 6 streaming services. So think about that. So the average American household pays from anywhere between 4 to 6 streaming services. But however, I think those numbers may have been significantly elevated for reasons which we'll talk about. Wow, guys, check this out. This is outside of the Sheraton Hotel, New York. And I think these are actually real flowers, all covering the awning here. This actually looks really, really beautiful. Wow. Hey, Gil is here. This has just joined. Good to see you, Gil. Thank you so much for joining. We're talking about Netflix earnings. Ryan Beck says, I'm really shocked at the lack of M&A in the space, long overdue. Now, the thing is, if we listen to Netflix's earnings call, right, the CEO and a lot of other management came on the call and said that due to consumers sharing their passwords, right, being what we just talked about, people sharing passwords and not buying and paying for their own account, that's hindering them from investing in the new shows and new programming, right, or R&D, research and development. But if you think about the statistic that we just quoted from Investors Business Daily, that the average American household pays for between 4 to 6 streaming services, I think those numbers are elevated, and I think that data set is actually skewed. And the reason why I think it's skewed is because of COVID, right? From 2020 into 2021, everybody was home. Everybody was literally forced to sit in their homes, order things off the Amazon, and watch TV. So what did you do? You're not spending the money going out to hotels and going out to entertainment and going out to eat. So you need to do something, so you spend it on streaming services. You spend it on Hulu, Netflix, Disney Plus, Peacock, you name it. And now that we're going through this all but slight downturn in the economy, I think consumers are going to start to look for things to cut out of their budget in their everyday life. So I don't know, I think there's been a lot of good points made in the chat. Specifically, we'll actually make a left here because I want to show you guys something near Rockefeller Center. So not only do we have a particular catalyst where consumers are probably going to look to cut costs, and they're probably going to cut, if you're paying for 3 to 5 streaming services, you're probably going to cut at least 2 or 3 of those and cancel them. But you also have extreme competition. So I think there's going to be extreme high costs for investing in new shows and new programming, all while you're seeing consumers cancel their subscriptions. Hey, Bree Graham says, I support the writers' strike. We are all relying on entertainment to survive. Interesting. Hey, Flat Smack is here. Good to see you. Let me read some of the other chats. Hey, NBA Elias is here. Says, hey, Tom, hope you had a good day. Good to see you, NBA Elias. Yeah, Jonathan Earl. I don't know, man. So I heard about that. There was a big parking garage collapse in Lower Manhattan. And I was looking at some of the video footage on Twitter. Man, that's like worst nightmare scenario. Now, I think according to some of the viewers in the stream here, I think there was about one person who unfortunately passed away and a couple others injured. But I mean, thank God, right? Because when I heard the news, right, when I heard the news that this collapsed, I think it was right around 4 o'clock. So I'm assuming that's right around when it happened. And that's right when everybody's getting into their cars and picking up their cars from the parking garage. So it could have been a lot worse. I mean, talk about scary stuff, for sure. Hey, D. Jackson says, Tom, I dropped Netflix last year. I only watch YouTube now. Well, D. Jackson, YouTube, that's another thing, right? YouTube Red, isn't YouTube Red the subscription service for YouTube? It's like, what, $16 a month or something like that? Real quick, everybody, if you look at the office building right here, this is Mizuho, and Mizuho is a Japanese investment bank. It is right across the street from the Swiss bank UBS, but you could actually sort of see their sales and trading floor. You see all the Bloomberg terminals lined up over here? If you look really closely, you can see the sales and trading floor there. Hey, Gil says, what's crazy, Tom, is in New York City in 2022, or New York City in 2022 enacted a law that forces LLs to get their parking garages inspected every 6 years. Well, Gil, let me tell you something. I'm not sure if you heard, I don't know when you joined the stream, but when I was a teenager, like 17, 18 years old, one of my part-time jobs was working in a parking garage on 83rd Street between Amsterdam and Columbus on the Upper West Side. I was washing cars for a rental car company, right? Just to make a couple extra bucks. And dude, those parking garages, not all of them, but a lot of them, are very, very old. And I used to have to take the cars in the car elevators, and those things were so old and they would break down all the time. And I always remember I would get stuck in the car elevators and we'd have to call the FDNY. And when you would pull the cars out of the elevator, the floors would shake, the walls would shake. I mean, some of these buildings are literally 100 years old. So, I mean, look, if I had to make a prediction out of all of this, I think the building department, there's just probably going to be widespread inspections on this. And I wouldn't be surprised if we see something similar to what happened after the horrible Surfside condominium collapse. Is anybody familiar with that? For those of you who aren't, there was a really horrible tragedy that happened in southern Florida. There was a massive condominium that collapsed, and I think over 100 people died. Now, after that, there's been so many inspections that have been done in Surfside, in North Miami Beach, in Sunny Isles Beach, and Aventura, and there's actually been multiple condominiums that were forced to be evacuated and condemned because of unsafe conditions. So I think that same exact process is probably going to happen now in New York with a lot of these parking garages. Because let me tell you, especially if you go to the Upper West Side of Manhattan and in the East Village, some of these buildings, guys, are literally 100 years old. So, you know, we'll see. I really wanted to show you guys really quick. This is Neuberger Berman. This is a very famous asset manager here on 6th Avenue. It is right across the street from UBS. Now, UBS obviously has been in the news because UBS acquired Credit Suisse, the failing Swiss bank. So now we have sort of a monopoly of Swiss banks in some sort. But now we are looking at Radio City Music Hall here. Hey, NBA Elias says, yes, rusted rebar caused the collapse in the condo complex in Florida. And dude, some of these condominiums, this is why if you guys are looking to, you know, a lot of people are looking to move down to Florida, I really wouldn't risk it and buy in a condo that was built prior to the year 2000. I just wouldn't risk it. I mean, you know, again, I'm not an engineer, but I would just probably stay clear, to be honest. Hey, Vladimir's here. Says, Tom, thank you for your streams. Always great to be here. Good to see you, Vladimir. Angel says, hey, Tom, do you ever show your face for your subs? We would appreciate it. Sometimes we do, for sure. Yeah. Now, guys, speaking of banks, we're walking past UBS. I just showed you Mizuho's sales and trading floor. We got to talk about our good friend Brian Moynihan, okay? Now, for those of you who don't know who Brian Moynihan is, he's the CEO of Wall Street mega bank, Bank of America. And Bank of America reported earnings today, and they crushed it. They absolutely crushed it. So Bank of America reported Q1 earnings. They beat Wall Street expectations, or I should say analyst expectations, beating on both the top and the bottom line. So if you want to talk about EPS or earnings per share, Bank of America reported 94 cents of EPS. The vast majority of analysts on Wall Street was expecting 82 cents in terms of the bottom line. Revenue also beat, coming in at $26.39 billion versus the estimate of $25.13 billion. Now, if we want to talk about profitability, we'll look to the line item called net income. And net income was up 15%. Get this. $8.2 billion in net income in Q1. Unbelievable. Unbelievable. If we compare that to Q1 of last year, Bank of America raked in $7.1 billion. So they pretty much made $1 billion more year over year. So a really, really strong quarter there. Now, we're going to go and do a deep dive into the quarterly earnings report. But before we do that, I want to give you guys some context here. So if you type exclamation point BAC in the chat, once again, exclamation point BAC in the chat, I have programmed Nightbot to drop the deck that was presented on the earnings conference call. And I would really strongly advise everybody take some time out of your day, maybe tonight, maybe later tomorrow morning, and read through the deck. You know, understand what parts of the business are growing, what parts of the business are contracting. Now, it is no surprise that mortgage originations continue to fall quarter over quarter, but then again, I mean, look where interest rates have gone, right? You know, if you think about this time last month, the average 30-year fixed rate mortgage was 7.25%. Now, rates have come down some, right? But they're still elevated compared to, you know, what we were talking about in 2021 when rates were 3%. I think the average 30-year fixed rate mortgage right now, as of doing this video, is about 6.8%. So we saw sales and trading activity increase, but we saw mortgage originations continue to decline. Even though it was a solid report, there was one thing that concerned me, which we'll talk about now. But real quick, this is the Rainbow Room entrance right here at Rockefeller Center. You could actually enter right here also to go to the top of the rock, which is my personal favorite observation deck in New York City, because if you're standing on the top of Rockefeller Center, you have an unobstructed, gorgeous view of a little building we like to call the Empire State Building. That's actually what the view looks like right here. Hey, Joan K is here. Good to see you, Joan. Thanks so much for joining us. Yeah, Angel says Tesla earnings tomorrow. What are your thoughts? Now, we talked about that yesterday. So I think, well, I'll tell you what Wall Street is expecting. They're expecting a drop in profitability of about 19%, and they're expecting margin erosion all the way down to 21%. So the main thesis, or I should say the main bull thesis for Tesla stock over the last 10 years was, many analysts would say, well, Tesla commands, or it demands, a premium valuation, because if you compare gross margins, right, if you compare Tesla's margins to all the other auto OEMs, Tesla blows it out of the water, which it does, and it's true. If you think about the average gross margin of an auto OEM, like a GM or a Ford, you're looking at mid-single digit margins, maybe, right? But if you look at Tesla, just last year they had about 30%, 29 to 30% gross margins, right? Oh, I think they have the roller skating rink here. But over the last 2 quarters, we've been seeing Tesla's margins erode all the way from 29%, and it's expected that tomorrow, when Tesla reports earnings, gross margins are going to come all the way down to 21%. And I think that's why you had the move in the stock that you had, where prices are down. I mean, the stock's cut in half. Jafet says Tesla is worth more than all car companies combined. You're correct. You're correct. Now, I have a little bit of a story about this, and then we'll just continue to talk about Bank of America's earnings. But does anybody know why they have all of the roller skating here in the summer? Because before, they never had roller skating here. They only used to have the ice skating rink. Well, if you think about a company called Aspen Holdings, there's some breaking news coming out of Rockefeller Center. You see the Today Show right in the distance over there? If you look right here, you'll see the Today Show. But above the Today Show, what do you see? This is a part of Rockefeller Center as well. All of this is office space, my friends. Now, the problem is, you see the 10 stories above the Today Show? All of this space is completely vacant. Well, there's some breaking news that Aspen Hospitality plans to convert all 10 floors above the Today Show of the vacant office space into luxury hotels. It's going to be about a 130-room hotel. And the reason why they're doing that is because even though Rockefeller Center, right? So I'll sort of give you guys a quick look at 30 Rockefeller Plaza so you could see some of the office buildings around here. Now, 90% is all leased. So you may think that's good, right? You may think, okay, all of the office buildings around 30 Rock, right here, are all leased. However, here's the bad news. When you look at the data, only 50 to 60% are occupied only on the busiest days, right? So if you think about the busiest days of the week in Midtown Manhattan, which would probably be Tuesday, Wednesday, and Thursday. So the busiest days, only about 40 to 60%, or excuse me, 50 to 60% of all of this office space is occupied. So if I'm a developer, if I'm a real estate investor, I'm going to assume that my tenants are not going to renew their leases, right? Ooh, I think that guy just fell. Yikes. But anyway, I'm going to assume that the vast majority of my tenants are not going to renew their leases, because if none of my employees are showing up to the office, why on earth would I continue to pay for prime office space right here in Midtown Manhattan? So what a lot of developers and landlords are trying to do is innovate. Right? So if you read the Wall Street Journal article today, the 10 floors here, and you can kind of see, if you look in the windows, everybody, if you look really, really close, maybe you can try to zoom in on the camera, you can see it's all vacant. And they just got approval to build a 130-unit hotel, because if you think about the type of traveler that is coming to New York City, business travel has really fallen off a cliff, but leisure travel has increased, actually. And that is why Rockefeller Center is trying to do fun things like this to attract people to come and spend money at the restaurants here at 30 Rock, to come and take vacations and to come and visit. Because if they just relied on all of the commercial office space as they usually have done, well, they're not going to be in business for much longer. So that's actually some good news. They got approval to start construction on a 130-unit hotel. That's going to be right here, brand new. Hey, Dusty Cole, good to see you. Welcome. Hey, Mark Francis, good to see you. So Jafet is asking me, did I see the Elon Musk interview with Tucker Carlson? So I did. I was actually watching a little bit of it last night. Now, otherwise, I would have never watched, ever. Wow, this place is cool. The Wall Street Journal article was right. You know, this is something that Rockefeller Center is really trying to do. You know, a lot of the corporate clients are gone. Now they're trying to make it more recreational to attract tourists, to try to make a lot of money. And I think it's working. Very cool. And yes, everybody, to be clear, I'm reading the chat. We are in no way advocating for people losing their jobs. It's not like we're cheering this on. We're just making an observation, right, to get people prepared for what may be coming. But yeah, I think so part 2 of the Elon Musk interview, I think, is tonight. I'm excited to watch that. But guys, speaking of Fox News, I think Rupert Murdoch and his gang, did anybody see the breaking news that actually came across Bloomberg maybe about an hour before we started the stream? News Corporation and Fox News is set to pay $787 million in a record-breaking settlement to Dominion over the election misinformation, the slander. I believe it was a defamation lawsuit, is that right? But that's pretty significant. Now, if we conceptualize this for a moment, I believe News Corporation makes about $1 billion a year, maybe a little bit under. So this is pretty big. I mean, a $787 million settlement. Now, what we don't know, and I actually don't really care, I'm just only covering just because it's pretty big news and it's a big number. I don't know what the settlement entails. And here's what I mean by that. This is Saks Fifth Avenue. Oh, guys, I got a story about Saks Fifth Avenue to tell you. Hold on. Now, I'm not sure if Fox News, a lot of the anchors are going to have to come on television and issue an apology. Sometimes they work that in the settlements. Or maybe this is just going to be, you pay the money, you write the check, and then, it's all, water under the bridge. I don't know, but we'll see. So, you know what? I really probably should have linked that Wall Street Journal article in the chat, because we've been talking a lot about commercial real estate on the live stream. Now, one of the things that Saks Fifth Avenue was actually planning to do, and you guys are never going to believe this, you see the top 2 floors of Saks Fifth Avenue, how it looks a little bit empty? They were actually proposing to pitch New York City to put a casino up there. Can you guys believe that? They actually wanted to put a casino on the top of Saks Fifth Avenue. Now let me tell you, if that was ever approved, that would be an absolute, total, unmitigated disaster if they put a freaking casino on the top of Saks Fifth Avenue. It just doesn't jive with the neighborhood, okay? Now, I'm not trying to be mean and I'm not trying to, bring a stereotype, but casinos generally doesn't really bring the best. And the reason why I say that is because I have a really, really good friend who heads up security at a major casino in Queens. And there's a lot of nefarious activity that goes on there. I mean, I'm talking about money laundering, sex trafficking, and we really don't want that here on Fifth Avenue next to St. Patrick's Cathedral. Okay, now I'm not going to say that's all that would be happening there, but it just is, I just wouldn't be for it. Now, that's how I would vote if I had to take a vote on it. Another thing that I think they struck down is there was again, this is all vacant office space, so people are getting desperate to try to make money on their investment if they're not going to have business or corporate tenants in there. So they're trying to turn towards entertainment. Now, there's a big office building in Times Square. I'm not too sure the exact address, but they also pitched New York City, or the city of New York, on building a casino in Times Square. Now, in my view, that would also be a disaster. But you know what? I'm actually kind of curious now. For those of you in the chat, and we could disagree, it doesn't matter, right? This is a really nice view of St. Patrick's here. Would you guys be in favor or against a casino in Times Square? Yes or no? Would you guys think it would bring much needed economic activity to Times Square? Because maybe it would. I don't know. I want to know your guys' take. Okay, a lot of people saying no for casinos. Bill says Sachs pushing for casino. Makes me question who's running the brand. Interesting. Sunshine After Rain says no. Buy the book said I would be against. Stylish Bunny says no. Wow, almost everybody says no. Hey, Sean Brown. What's up, Sean? Says they're also thinking about building a casino in Coney Island. Ooh, man. Yeah, I don't know. I just wouldn't really want to turn New York City into Vegas. New York is not Vegas, right? You go to Vegas for Vegas. Frank, so it seems like unanimously everybody in the chat is saying no casino. Yeah, I mean, I just think it would bring the wrong crowd in. And I'm not trying to bring about a stereotype or, scapegoat somebody, but it just wouldn't fit, is what I would say. But I don't think the city is going to approve that anyway. I really don't think it's going to go through. I don't think it's going to pass. Yeah, Meld says casinos. Yeah, somebody says, but a casino in a skyscraper is actually pretty cool. Yeah, I guess, but... Hey, Julie M says, hey, Tom and Walks on Wall Street fam, good to see you. Joseph Hardaway is here, says, hey, Tom and chat, good to see you guys. Yeah, I mean, for those of you just tuning in, we are now on 5th Avenue. This is the beautiful Cartier building. This is actually one of my favorite buildings in New York City around Christmas time. They always have really beautiful Christmas lights up here. But, guys, one of the things we were talking about tonight, and we'll finish our conversation about it, is bank earnings, right? So Wall Street Mega Bank. Whoa, hold on here, guys. Big pause, okay? Look at this. Did the famous Versace store on 5th Avenue go out of business? It looks like it. You guys see this? We got to cross the street and check that out, man. It looks like Versace moved out of their flagship store on 5th Avenue. That is crazy if that's the truth. I'm getting distracted here, but that's big if that happened. Let's actually go investigate that further. Let's cross the street. It looks like Cartier is alive and well, but it looks vacant. Let's see, I think I see some cardboard over the doors. And then we'll talk about Bank of America, because they did post a thunderous blow the doors off earnings report. Brian Moynihan, the CEO, did a great job beating on both the top and the bottom line. Yeah, I think they did. Look at this. Everybody check this out. The flagship store on 5th Avenue is no longer. Wow. Yeah, they took down all of the Versace insignia right here. It's done. Crazy. You can see the inside. Look at that. Wow, Hawaii says, yeah, I just Googled it. It just closed. That's crazy. Wow, guys. I actually don't know what to say. I'm assuming they probably have a plan to open this somewhere else, right? Frank says, do we know why? I don't, but this was one of the most famous attractions to 5th Avenue, right? If you think about New York City's 5th Ave, you think about all of the luxurious shopping. Now you see Ferragamo right there. If you walk all the way up to 59th Street, everybody, so all the way up the block here, you'll get to the flagship Apple store. You see Bergdorf Goodman. You have the famous Nike store on 5th Avenue right here. You have the famous Zara flagship, and now the Versace is donezo. It's out of business. Now, I'm going to do a little bit more investigative work as to why this happened. If I had to make an assumption here, I think the rent was just too high and they're probably going to open up shop somewhere else, probably somewhere close by. But that's kind of crazy. I mean, this thing has been a Versace store since I was a kid, man. That's wild. Now, is this another example of exactly what we've been talking about as it relates to commercial real estate? You know, this is another vacant store here on Fifth Avenue. I don't know what they're going to fill this with. I mean, if Versace couldn't make the rent, I'm not sure who else is going to be able to make the rent. Crazy, right, guys? Wow. Oh, Bill says they said they're moving uptown. Yeah, so maybe, you know, if I had to speculate, and I guess there's really no purpose in speculating, this is the Armani Exchange here. Retail space on New York City's Fifth Avenue is top dollar in the world, right? Obviously. So they probably ran the numbers and said, look, if we can go a couple blocks either north, south, east, or west, it's kind of the same thing. You're probably going to get the same foot traffic, and we really don't need to pay a premium by being on Fifth Avenue. So maybe it was a pretty good business savvy move. Maybe it was a pretty good business savvy move. We'll see. Shatoya Davis is Thomas Versace part of the LVMH luxury brand? That I'm not sure. I don't think so. Could we actually get a confirmation on that? Is LVMH a part of, or I should say, is Versace a part of LVMH? I don't think so, right? I would guess no, but you know, we've been talking about this massive bull market in luxury, right? Think about, I would say luxury and luxury hospitality. Look at Hyatt, ticker symbol H. I think it was up about 4% today, reaching a 52-week high. And LVMH continues to hit new all-time record high after all-time record high, and they're absolutely crushing their earnings. So luxury is actually doing really well. It's actually technically the place to be in terms of equity positioning. But real quick, before we talk about Bank of America, I know we're getting sidetracked here. I want to point out to you guys this building, okay? Now the building you're looking at is 641 Fifth Avenue. It's actually called the Olympic Tower, okay? And if you want to pull this up on StreetEasy or Zillow, you'll see exactly what I'm talking about, because in this building, so if you go on Zillow, StreetEasy, just type in Olympic Tower or 641 Fifth Avenue and look at some of the units that are for sale or for rent. Now, the units are so breathtaking because the building is so strategically positioned directly across the street from St. Patrick's Cathedral. Now, why is that very good for Olympic Tower? Well, St. Patrick's Cathedral is not going anywhere, and St. Patrick's Cathedral is not a huge skyscraper. So this building got really lucky that they're next to the St. Patrick's Cathedral, because all of the tenants really have an unobstructed view of the Empire State Building, the Chrysler Building, what else? And One World Trade Center. And you guys will see exactly what I'm talking about. So once again, Olympic Tower, I think the apartments start on the 20th floor. And since St. Patrick's Cathedral sits so low to the ground, they have an unobstructed view of some of the most prestigious buildings in all New York City. It is an unbelievable building. I love it. I have a good friend who just last year signed the lease in the building. And his view is insane. You see all the way down in Lower Manhattan, World Trade Center. You see the Empire State Building, which is right here. It's actually lit up in red, white, and blue. Really, really beautiful. But guys, we got a little bit sidetracked, but that's okay. That's good. I got to tell you, well, I'll give you the Nightbot command, and then I'll tell you one of my biggest concerns that we're seeing not only with Bank of America, but across the board in the financials, okay? So if you type !BAC in the chat, it's going to drop the deck, the earnings deck that was presented today for the Q1 earnings call for Bank of America. Now, we always talk about how we can use a lot of the Wall Street mega banks, specifically JP Morgan Chase, Citigroup, Wells Fargo, and Bank of America, we can use their debit and credit card spending and their credit card delinquency data as a proxy for the health of the American consumer. So here's the good news, and then I'll give you the bad news. Well, I guess I'll give you the bad news first. Bank of America set aside about $931 million for credit losses in this quarter alone. Now, yes, it is true that is less than what they set aside when they were dealing with the COVID pandemic. And even though delinquencies are still running well below pre-pandemic levels, we're starting to see a trend emerge. Now, I always tell you guys, it's not necessarily the number, it's the trajectory of that number, right? So if you think about net charge-off data, and again, look at the earnings report for yourself. If you type !BAC in the chat, it gives you guys the PDF. You can look at it. It's a visual. But we'll talk about it now. Net charge-offs are still below pre-pandemic levels, but they're gaining steam. Now, it's not going gangbusters, but over the past 4 quarters, you're starting to see it become on the rise. And it's not just with Bank of America, it's Wells Fargo, and it's JP Morgan Chase. Now, I'm not saying this to alarm anybody. I'm just saying this because I think we need to be aware. In addition, I would like to make an observation as it relates to credit card balances. If you look at the credit card balances at Wells Fargo, JP Morgan Chase, and Bank of America, credit card balances for the last 4 quarters have been increasing. And this actually supports the data that we've gotten from the Federal Reserve that says consumer debt is at an all-time record high. So there only needs to be one catalyst that really sends these delinquencies and defaults skyward. And I think that catalyst could potentially be unemployment. But so far, unemployment is still at an all-time record low. I think our unemployment is like at 3.4% right now. But we'll see. Now, net income, so if you want to talk about profitability, it was actually up 15%. They crushed it this quarter. Net income at $8.2 billion. If you think about this quarter last year, so year over year, they made about $1 billion more this quarter last year, right? So $7.1 billion versus the 8.2. If you look at spending, so we'll talk a little bit about spending now. If you look at credit card and debit card spending, it was actually up 6% year over year to $210 billion. So consumers are still spending. Credit card and charge-offs are starting to increase, but it's still below trend. But this could be the start of a major trend, potentially. So I don't know, what do you guys think? Do you think that this is the start of a larger trend and you're going to start to see massive credit card defaults and delinquencies? Or do you think this is just going to be a mean reversion? And what I mean by mean reversion is it's just going to go back to pre-pandemic levels instead of being below pre-pandemic levels for about 2 years now. I want to know your thoughts. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. Also, if you look in the description of this video, we now do have the links to the Substack. If you want to sign up for that, receive all of the information for free. Hey, Dr. Longas, what's up, dude? Good to see you. God bless. Mimi says, I heard the data lags, so bad data will start emerging later, says Mimi. Maybe. TK Porsche says it's probably just a reversion to the mean. Well, hopefully. That's what I'm hoping for. Some people are rooting, and cheering on. We hope we have another, 2008 Armageddon style moment. I don't. because that has some serious ramifications. Michael Joseph's credit card fraud is also worse than ever. I would like to see the data on that. I'm not saying you're wrong, you could be right, I just don't really have the data on that. Hey, D. Jackson says, thousands upon thousands of people are being laid off weekly. Well-paying jobs, that's very huge. So D. Jackson makes a good point that I think we need to pay attention to. Somebody used to say hello to Brazil, good to see Brazil. Now, you make a good point, and it's appropriate not to be oblivious to this. Did anybody see the news, breaking news out of the Wall Street Journal today, as they talked about the big consultants, so the big four? You think of EY, you think of Deloitte, KPMG, and the like. Well, this is right around the time where big consultants and consulting firms, accounting firms, do their recruiting from MBA students, right? MBA graduates. Now, due to the economic downturn, the news is that they're not yet rescinding the offers. What they're telling the recent MBA graduates is, we can't have you start the job right now, but what we can do is we can give you $20,000 and you can become a yoga teacher for the next year, and then you could start in 2024. Now, I know what many of you are thinking. You're like, wait, what the hell did Tom just say? Like, what? That didn't even make any sense. Yeah, that's happening. So the economic outlook is getting bleak, right? I'm not trying to be a pessimist, but I think we need to live in reality. Layoffs are sweeping across the board. Interest rates continue to rise, and I think they'll continue to go up. I think the Fed funds rate is going to end the year at 5.5%. So instead of KPMG, Deloitte, EY rescinding these offers, they're like, look, we don't have work for you right now. The economic environment is a little bit uncertain. We'll give you $20,000 and you can become a yoga teacher, or you could take a safari to Africa. I swear to God, that's what the article was today in the Wall Street Journal. Did anybody else see that? Or maybe you're an MBA student. Maybe you work for one of these big consulting firms. Is that the rumblings that you're hearing within your hierarchy? Now, 2 days ago, it's appropriate to also note, now that we're talking about consulting, EY is laying off about 3,000 employees. Mainly back office roles, meaning not client facing. Joe Hernandez says, Tom, they're also doing that for tax purposes. Interesting, Joe. Very interesting. MBA Elias says, I saw the article. Yeah, it's kind of weird, right? Hey, Side says, hey, Tom, love watching your live streams. I learned so much, and I love the views of the city. Well, thank you so much for saying that. I appreciate it. We appreciate you being here. Blues Writer says, I'd wear yoga pants for $20,000 for the year. I think I probably would too, honestly. Let me read some more chats. MBA Elias says, why would you spend time and money on an MBA and they told you to wait? I don't know. I mean, I think an MBA is worth it. Many employers do pay for you to get an MBA. Krog Dog, let's see what Krog Dog says. Says, my father worked with the woman whose son had a job offer rescinded in 2007 from the firm Lehman Brothers. Whoa. Yeah, talk about a bad break that is. Yeah, so that's another thing. That's another piece of breaking news. Did anybody see that? And you know, it's funny that that news broke, because just yesterday we were talking about how we are very bullish on the United States, Mexico, Canada, and India. So some news coming out of Apple, ticker symbol AAPL, Tim Cook's company. The first Apple store opened in India. Very good news. Now, I'm very bullish on India in general, very bullish on the Indian economy. And does anybody want to know why? Does anybody want to take a guess why I'm very bullish on India in general? While we're answering that, I want to show you guys a beautiful view of the Chrysler Building. It's one of my favorite Art Deco style buildings in the entire city. It's an absolute gorgeous building. Hey, JPN, what's up? Good to see you. Michael Joseph says big tech industry there. Mimi says, Tom, I'm long India ETFs. Brian says labor sourcing, manufacturing. It's actually because of population growth. Those are all good answers. But if you look at the data, right, and there's a lot of data that supports this. I told you guys my friend is a quantitative at one of the major quantitative shops here on Wall Street. And I'm going to get his permission to share a case study that he did as it relates to population growth and the correlation between economic growth or GDP growth. And do you guys know that 40% of the population in India is under the age of 25 or 25 years of age or younger? And I think India's population just surpassed that of China. Is that correct? So those are prime consumer ages. And when you have population growth and you have innovation and you have education and a very, very big push and focus on education, that is like the magic elixir for success. In terms of a country's development, would you agree? Now, if you look at a country like Japan, and I love Japan, I'm not trying to, knock any country. I love Japan. I'd actually love to visit there. It's one of my lifelong goals is to visit Tokyo. But Japan has a really big problem, and we can't deny that. And that problem is population decline. China has the same problem. Many European countries have the same problem. The United States does have that problem, but we also don't have that problem. And I know that sounds like a contradiction, but real quick, before we talk about that, guys, this is Grand Central Terminal. This is it. One of my favorite buildings in all of the city. Now, they just completed the East Side Access project into Grand Central Station, which is very convenient for all fellow Long Islanders like myself. So now if you work on Park Avenue or in Midtown Manhattan, you don't have to go all the way to Penn Station and then take the train all the way to, 42nd Street. You can just get off right here, which is actually really good. I'm glad they did that. But the good news for the United States, and Mexico and Canada, by the way, is even though it is true that we're not having as many kids as before, I should say as previous generations, where we benefit is we are essentially a brain drain to the rest of the world. So what do I mean by that? Well, there's very, very high demand that people that want to come here to start businesses, to get an education, to start a family, right? So immigration to the United States is really going to be a very, very net positive for economic growth and GDP growth in the United States over the course of my entire lifetime. You can't say the same thing about China, in my opinion, okay? Think about the last time you talked to somebody. Maybe you guys have friends that you went to college with that live abroad, right? You really hear anybody want to say, yeah, I really want to move to China. I want to live in China, right? Now, I'm not saying China is a bad place. I'm not. But all I'm saying is that the vast majority of international students that I went to college with, and I went to college with a lot, right? I went to college in the most diverse city on earth, New York City, ton of international students, and everybody, I'm serious, talking about everybody, wanted to get a visa to live in the United States permanently. The USA is a one-way street, pal. Everybody wants to come here to innovate, to generate business opportunities for themselves and others. You can't say the same thing about other countries, right? That's what makes the United States unique. We have a free market capitalistic society where we essentially allow individual citizens to get rich, to enrich themselves and other people around them, because we have individual property rights and we have free markets. And as long as that stays intact, in my view, as long as that one sacred, true beacon of American freedom stays intact, it's all systems go, and it's going to stay that way, in my view. So my bull thesis for India is that very strong population growth, and 40% of the citizens are 25 or under, which is prime consumer age, and they have a very, very strong focus on education, which is exactly what you need to have a powerhouse economy. Hey, Felipe says, this is true, I'm Brazilian and I wish I could live in the United States. Well, Felipe, come on down, my friend. We want you here, we need you here. And if you ever make it here to the United States, we welcome you with open arms and we're ready to rock, my friend. Hey, Drew H, says, to be honest, it is not that China is rising, but USA is declining, says Drew H. That's an interesting way to look at it, actually. So maybe Drew H is arguing that the United States is losing a little bit of its, entrepreneurial spirit. Maybe. Now, I do subscribe. I will say this, because, we do also have to give both sides of the story. Okay, this isn't CNN, this isn't Fox News. I do see some concerns. I do see some concerns, and here is where my concerns lie. Well, first of all, let me say this. If you look back throughout history, the average real superpower lasts about 100 years, and then you have a new top dog in town. Right? I mean, right or wrong? Every superpower, it's either, it's 100 years, and then you have a new top dog in town. The United States, our clock is ticking on that. But then again, we live in different times. Now, the famous last words on Wall Street and the famous last words in anything is it's going to be different this time. Because as you guys know, if you want to fill in the blank, it's never different this time. It's always the same. But I think we are in a very unique position for a few reasons. And I really wanted to do a deep dive and hammer down tomorrow, but we'll talk about it a little bit today. Again, people generally crave personal property rights, individualized freedom for themselves. And that has been the American way, right? And that really attracts people from all over the world. People don't want communism, people don't want socialism, they want free market capitalism to be able to produce goods and services, be entrepreneurial, and have a better life for themselves, right? And so long as that structure stays intact and is at the forefront of American values, I think we're going to continue to thrive. But we are sort of seeing a deterioration of those values, a little bit, right? We've had a big, democratic socialist movement in the United States, which is true. But I think one of the reasons why that's happening, in my view, is because usually when you have it too good, you sort of look for things to complain about, do you not? And the United States, the quality of life here is so good. And generally speaking, if you think about wars, no war has really ever, in our lifetimes, has ever been fought on American soil. I mean, we have the best neighbors, Canada and Mexico. So I think a lot of people complaining about the US don't really have good world perception about what it's really like in other places all over the world. And there's a very famous quote, I'm probably going to butcher it. I think the quote goes something like, weak men, you guys know the quote, I'm going to butcher the quote, I never get it right. I think it's weak men create hard times create strong men create good times, and then the cycle repeats and starts all over again. But I don't know. We'll see. Hey, Carl Roth, what's up? Good to see you, Carl. Welcome. Now, guys, we're standing directly outside of the gorgeous New York Public Library, the Stephen Schwarzman building. This is one of my favorite buildings in all of New York City. Let me read some of the chats here. Hey, Truth Teller says there's an epidemic of people in the US that don't understand what actual tough times are, perhaps. Mimi says healthcare costs in the United States are way too high. That is true. You know what else is too damn high in the United States? Well, mainly in Florida. Insurance costs. If you guys want to talk about something that's gotten just totally out of hand, it's property insurance costs in Florida. But anyway, I'll stop complaining. Let me rearrange my chat here. Anyway. Yeah, Truth Teller says too many natural disasters. You know, one of you guys sent me a really good article. I think it was a USA Today article. You guys sent it to me on my Instagram. I appreciate that. If you guys ever want to send me interesting things that we should talk about on the stream, feel free, by the way. You guys send me a lot of good stuff. But, you know, the article was talking about, obviously, it's going to be a big epidemic in states like Florida, in states like California, and Kentucky actually came up on the list too. I think they've been suffering from massive flooding over the last couple of years. But, you know, if you think about California, right? We had this conversation specifically, hold on, I'll show you guys the lines here. We had this conversation specifically as it related to the wildfires, which is really devastating, by the way, and really, really horrible. I mean, think about that. Could you imagine owning a beautiful home in California and all of a sudden, you know, you have to evacuate your entire neighborhood, all of your pets, because there's a fire that you can't control that's going to sweep through your neighborhood and burn the whole place down? I mean, that's really heartbreaking. You know, over the past couple of years, we've had to endure a lot of that. Now, I don't have any family from California. I'm not from California, I'm from New York. But it's still heartbreaking to see. I mean, I was watching, I think it was on CNN Business, that they had to evacuate a lot of the animal shelters there due to the fires. And it was wild. But anyway, now it's funny because, well, I shouldn't say it's funny. I'm just using that as a turn of phrase. I don't mean like it's actually funny. You know, the thing that's crazy is that, you know, California has really been suffering from a drought. However, this year in 2023, we literally got the polar opposite. California's gotten so much rain that it's actually caused massive flooding. So talk about how crazy that is. All of the rain in California, thank God, right, has essentially solved all of the drought problem in the state of California, has it not? Which that is good news. Because here's another thing, guys, right? We're talking about, you know, some of the reasons why I think the United States will continue to be dominant. It's because of fresh water. Not a lot of people talk about that. Right? Think about the US and Canada, the beauty of having the Great Lakes. That is a precious, precious, precious resource that I think a lot of people overlook. But yeah, hopefully all of those viewers in California got through that in one piece. Now, speaking of rain, I told you guys about this. Fort Lauderdale and northern Miami. We got 24 inches of rain in 6 hours. I've never seen anything like it. It was ridiculous. It was cartoonishly ridiculous. This is Bank of America Tower, by the way. I think it's very fitting for the live stream because Bank of America did report earnings today. It's Brian Moynihan's building right there, right here, Bryant Park. But we had 24 inches of rain in 6 hours. I've never seen rain like that ever. My flight was canceled because the Fort Lauderdale airport was closed down, I think, for 2.5 days. The whole thing was flooded out, so the planes physically could not take off. So even though the rain stopped, you still couldn't, fly a plane. The runways were under like a foot of water. Crazy. Wow, Hawaii says it's been raining here too, just about every day. Well, Hawaii definitely has that climate, right? Melissa 2087 says my friend lives in Florida. He got so much rain, he sent me pictures of it. Wow, he had small alligators in his ground pool. Yeah, I don't have any of that, thank God. Now, where I was, I really didn't have any flooding. You guys want to know something interesting? You see this college right here? It says Stella and Charles Gutman Community College. Now, this community college actually used to be called the New Community College. And this is actually where I was going to go. It's in the City University in New York. And I was actually going to go to school right here. Because my grades, my grades were not good in high school, guys. I had a rough go about it in high school. I did not perform well in high school. Mainly because I was a little bit rebellious, probably too rebellious. I probably shouldn't have been as rebellious as I was. But I didn't like the fact that anytime you took like the core classes, right? If you talk about, your science, your math, your chemistry, in New York, you have to do it a certain way. So in New York State, and I'll just tell a quick story. It's irrelevant to the stream. Anyway, if you went to high school in the state of New York or public school in the state of New York, we have something that's called a Regents examination. And you could, in theory, get the answers to the questions correct, but they still mark your answers incorrect if you don't show your work the exact laborious and ridiculous way they want you to show it. So I was a little bit rebellious, and I would never, I was stubborn. I was a kid. I'm like, I'm not doing this. I'm like, there's better and easier ways to get to the answer. I don't want to write out 20 paragraphs to get this little dinky answer. So I tested really poorly on almost everything and couldn't get into anything, pretty much any college. But anyway, I want to point out this building right here to you guys. This is 1050 6th Avenue. This is another gorgeous, gorgeous building. Now, the top 4 floors are actually individualized penthouses overlooking Bryant Park. Now, on a clear day, you could actually see all the way to Central Park. Now, I'm actually going to try to get you guys up into one of the vacant units here. It's just absolutely breathtaking, really, really stunning. Maybe if I can get you guys in there, I'll post that video there on my IG. But we'll see. The ABX girl says, Tom, I graduated from New York City High School just in time, and I remember the English Regents. Yeah, all of that stuff. It's now, I think every single state has their own state test. But New York, I think it's a statewide thing. I didn't go to school in New York City, but what's it called? I think it's a Regents, the state test. Anyway, guys, last topic I want to talk about. I think it's so critical here. That also coincides with bank earnings. We're going to turn down here. I don't want these people right on my back. But if you noticed the trend in a lot of these bank earnings so far, it's that over the last quarter or so, deposits have been fleeing banks, generally speaking. Right, some banks have been benefiting from the Silicon Valley Bank situation, and some of them have not. But does anybody notice the narrative that is circulating around the reasons why bank deposits have been fleeting? It's pretty much all been blamed on the Silicon Valley Bank situation. However, I think another very big piece of the puzzle lies in the bond market or the debt market. And I'll sort of explain my position why. But before we do that, if you want to follow along with me, if you go to cnbc.com/bonds, once again, cnbc.com/bonds, you'll actually be able to see the yield curve live in real time as we're talking about this for some reference. So as of recording this video, if you look at the 1-year treasury, okay, the 1-year note is yielding just under 5%, 4.84%. If you look at the 6-month treasury, it's at 5.12%, and the 10-year US Treasury, which is the benchmark, is at 3.585%. Now, here's what I believe. Smart money on Wall Street, and even individual investors as well, the vast majority of people want to make a return on their money. And if you think about the past 14 years, we've been in an environment of ZIRP. So ZIRP is an acronym that stands for Zero Interest Rate Policy. So if you give your money to Brian Moynihan, the CEO of Bank of America, if you give your money to JP Morgan Chase, Jamie Dimon, they're going to pay you nothing. So you have billions upon billions of dollars sitting in checking accounts, sitting in savings accounts at all of these Wall Street mega banks that over the last 14 years have actually cost you money factoring in inflation. It's called real rates, right? So anytime we really talk about interest rates, we want to talk about real rates, right? Not nominal. We want to talk about real rates, which is the return factoring in inflation. So there's another acronym I want to talk about, which is called TINA. So TINA stands for There Is No Alternative. Well, my friends, now there is actually an alternative. If you think about the last 12 to 15 months, we've been in one of the most aggressive quantitative tightening cycles of my lifetime. We've had about a 500 basis point move in interest rates. The Fed funds rate as of doing this video is at 4.75% to 5%. And again, that 1-year treasury is just a hair below 5%. So money is going to move, and money attracts money. So why would I leave my cash with Brian Moynihan when he's going to pay me 0.00001% on my deposits, when I could just take my money to Treasury Direct and get 5% risk-free rate of return on my money? So everybody wants to sort of really hammer down on this narrative that the reason why money is fleeing away from not only the big banks but regional banks is only because of the Silicon Valley Bank collapse and the contagion effect. But if you look at the bond market and you understand rates, the reason why interest rates are going up is actually the causation of the reason why the money is moving, right? So investors are waking up to this, and I think that's why you've also seen record amounts of cash levels in money markets as opposed to cash going into equities, right? Because you could, in theory, just leave your money in a money market at Charles Schwab, any other broker-dealer, Interactive Brokers or the like, and earn about 4.5% on your money, technically risk-free. So I think that's something we need to be paying attention to. So again, if you go to cnbc.com/bonds, you'll be able to keep an eye on the yield curve 24/7, 365. And hey, maybe if you have a couple $100,000 laying around, a couple $1,000,000 laying around, maybe you want to park it in treasuries, get that risk-free rate of return. Who knows? But guys, enough treasury talk, because look at this. This is America right here. This is the Empire State Building. This is one of my favorite views of the Empire State Building. It's lit up in the iconic red, white, and blue. Looks fantastic. Art Deco style building, built during the Great Depression. This is gorgeous. Hey, Frank Garcia's here. What's up, Frank? Long time no see, dude. Good to see you. Frank says, Tom, what's going on with the stock that Elon Musk is putting on the market for his AI companies? Has it hit the market? I'm not sure. I mean, the last I heard, Elon publicly disclosed that he's not going to be selling any stock until 2025. So unless something changed, I'm not sure. Now, did he say anything in the Tucker Carlson interview? Because I know that Elon is going to be making a competitor to Chat GPT. It's going to be called Truth or something like that. Does anybody know the exact name of the company? But essentially what he wants to do is make a non-biased AI, which I'm not even sure is possible. But then again, you know, if we learn anything from history, it's never doubt Elon Musk. I mean, the guy's going to put freaking people on Mars. I'm sure he could figure out how to build a non-biased AI. But I'm just not sure how you would do that, because if you think about machine learning and artificial intelligence, a lot of it is just feeding machines massive amounts of data, and it learns pattern recognition from that data, right? So there's actually two forms of AI. I actually want to give you guys a quick book recommendation. Now, the book is called AI Superpowers, and the author is by a gentleman who I respect a great deal. And his name is Dr. Kai-Fu Lee. Once again, the author is Dr. Kai-Fu Lee. And he actually used to be the CEO of Google China during the tech and telecom boom. And if anybody remembers, you know, back in the day, a lot of US companies were trying to break in to China, but they were met with really, really fierce resistance. And back then, I should say pre-2005, a lot of Chinese tech companies were just rip-offs of American tech companies, literally just ripping off the source code. But Dr. Kai-Fu Lee was in charge of the China growth strategy of Google, specifically the search engine unit. But now he is retired. Well, I should say semi-retired. He made a fortune being CEO of Google China, or I should say president of Google China, excuse me. And now he runs a venture capital firm called Sinovation Ventures. I would actually also, in addition to that book recommendation, I would recommend you guys look up that firm. So Sinovation Ventures, you could actually look at the individualized companies that they invest in, obviously early stage investing. But the very unique thing about the firm, yes, it's based in Silicon Valley, but they specifically focus on Chinese-based AI machine learning companies. Some pretty cool companies in the portfolio, by the way. But in the book, it really does a deep dive into the main differences between general AI and narrow AI, right? So general AI, I really think is a long ways away, but narrow AI is what people really need to worry about. And narrow AI is using artificial intelligence to do very, very specific style tasks, right? General AI, I guess you can consider it reaching like a singularity to humanity, which I think is a very, very long ways off. I don't even think it's going to be possible to achieve that, but we'll see. But check out that book. That is an awesome read. You guys are going to learn so much about AI and China specifically. So again, AI Superpowers by Dr. Kai-Fu Lee. Really, really great book. Hey, Michael Joseph with Tom. I'm an AI software engineer, and AI is currently very misunderstood. It's not Terminator, and the large language data sets are scraped off the internet, which is why there is a bias. Yeah, exactly. And that's a really good point. Now, I've used ChatGPT. I think it's good, right? I've been using it to write like scripts. Hold on, we got the FDNY coming by. But the thing is, I mean, in my view, AI is going to be inherently biased because humans are building the AI. Now, I guess if you program the AI to physically make decisions for itself, that could solve the problem. But to Michael Joseph's point, you know, if you just ask ChatGPT something, essentially it scrapes the internet. It's like a big web scraper. And it, in split second, can analyze so much data and spit you back out an answer, right? So if the vast majority of the data it's scraping has a narrative bias, or its programmer has a bias one way or the other, well, then that's all you're going to get. I don't know. I'm not an AI engineer. But I don't think the United States should make the mistake of limiting and banning these AI tools. I think that's a horrible, horrible mistake. You should never, under any circumstances, ban a piece of technology, because all of that innovation will just move elsewhere, offshore, which I think, not to get too far off topic here, but unfortunately the United States is doing that as we speak with cryptocurrency and Bitcoin specifically. A lot of that innovation is going to Abu Dhabi. A lot of that innovation is going to South Korea, because we have a lot of incompetent politicians that don't understand the technology. So unfortunately, a lot of that stuff is going offshore. Places like Abu Dhabi and the like. Team, we are now at Koreatown. This is one of my favorite places in all of New York City. It's a very fun place. Right here, 32nd Street and Broadway. We walked through here last night. It doesn't look like there's too many people here again tonight. Let me catch up on some of the chats. Mark Francis says, yes, my programmer friend says that. NBAI says, if the United States bans AI technology, China will not ban it. Interesting. Stephanie says, short-sighted. Walking Minnesota says, do I think GPT should have opinions on human issues such as being pro-choice or pro-life? Probably not. But it should be able to give accurate information about Donald Trump. Absolutely. This is Walking Minnesota. Yeah, I mean, I think you make a good point, right? I think you make a good point. Now, to your point, should, AI say, that's a really good point now that I'm thinking about that. Now, I've never asked ChatGPT that. And again, I respect everybody's political viewpoints here, whether you're pro-life or pro-choice, I respect it. But what if you ask ChatGPT, what should I be? Does it give you a definitive answer, or does it provide you with, wow, I actually may do that when I get back home or on the train. I should say, should I be pro-life or pro-choice? Should I be Democrat or Republican? I don't think it'll give you a definitive answer. I don't think so. That's a good way to think about it. I never thought about it like that. Oh, we got to walk down a little bit more because the street's blocked a little bit. Now, the problem with Koreatown is there's just so much garbage lined up and down the street. There's so much. This guy's literally parked within mounds and mounds of trash. Man. Now, I do think that, a lot of people, sort of getting back to the equity side of the house in terms of stock market growth, economic growth. Yes, I think the market is going to go suffer an earnings recession, potentially, right? State Street is another major financial firm that reported earnings yesterday. Really, really horrible earnings. Really, really horrible earnings out of State Street. Charles Schwab reported a decent quarter. I think the stock actually rallied today. But I think over time, with all of this innovation, especially in AI and machine learning, that is going to literally, it's just going to be like a hockey stick chart for economic growth and productivity and efficiency. So here's my bet, right? And I think the vast majority of people really only need to make one bet, unless you're an active money manager on Wall Street running money, right? And that bet is this. Do you think GDP is going to continue to grow in the United States? And do you think corporate earnings is going to follow the same trajectory of growth as it has over the last 100 years? So what do I mean by that? Well, I'll sort of explain what I mean. And I'd actually like to give an example by paraphrasing one of the greatest mutual fund managers of all time. Now, one of the greatest mutual fund managers ever to do it is a man by the name of Peter Lynch. So for those of you who don't know, Peter Lynch used to run the Fidelity Magellan Fund. Now, if you're interested in the financial markets in general, I think one of the greatest books ever written on the topic is by Peter Lynch. It's called One Up on Wall Street. And I think I actually posted this to my Twitter, by the way. So if you're not following me on Twitter, if you want to connect there, you can follow @WalksWallStreet. But what Peter Lynch says is this. Over the last 100 years, corporate earnings in America, on average, now again, this is an average per year. Now, yes, some years it goes down, some years it goes up, but on average, corporations churn out 8% earnings growth a year. That means the stock market ought to double every 12 to 15 years. Now, if you go back, here's a really nice view of the Empire State Building. Man, this is a gorgeous shot right here from 32nd Street. So here's the bet, right? This is the bet that I think every investor needs to make, including myself. Do you think that earnings trend is going to continue, or do you think there's going to be a break in trend and corporate earnings growth in America will be in structural free fall for the next 50 years? Now, I mean, what do you guys say? Do you think that earnings growth in America is going to stay on that same trajectory, roughly 8% earnings growth a year? I think so. Now, the next 2 or 3 years, we could go in a very severe earnings recession. There's going to be more 2008 moments. There's going to be more, COVID pandemics. There's going to be more crises. But over time, the American economy tends to be very resilient for all of those things that we just got through talking about, right? Specifically, free markets. We send a signal and send a message to the rest of the world. Wow, look at all of that trash, guys. Oh, maron. Jeez. That is definitely not appealing to the eye. We send a message to the rest of the world that if you come here, you could have individual property rights. You could start a company. You can have a better life for yourself. And that's why pretty much all of the world's greatest companies and most valuable companies are in America, right? Here's an exercise for everybody. I think this will be an interesting exercise. The top 10 most valuable companies in the world, I think 70% of them come out of the United States. Is that true? I think the only exception is Saudi Arabia, obviously, Saudi Aramco, and LVMH, which is a French brand. Everything else is America. So I think that's probably going to continue. Dan McLaren says nothing is guaranteed. The US could start trending down and our 401ks could be worthless. Yeah, I mean, anything's possible. Anything's 100% possible. But I think my thing is this, and you guys are out working every day, right? You guys, have jobs. You guys are either retired from having a job. You probably have friends that are employed or working on building startups or companies. It doesn't matter if there's a downturn. It doesn't matter if interest rates, the Fed funds rate's 5%. People are still working. People are aggressively pursuing what they want to do right now. We'll wait till the truck goes by. Love the FDNY. All right, let me catch up on some of the chats. Hey, MBA Elias says, Tom, earnings growth will stay the same because innovation and technology and ideas start here, has been proven time and time again. Yeah, I mean, I generally tend to agree with that. Now, there's a lot of people in the chat that don't agree. And maybe you guys are right. But here's generally what I notice. And I got this piece of advice from a really, really successful hedge fund manager. That's one of my really, really good friends. And he says, sometimes you can get so caught up in the news and in the data that you forget to read the data that matters most, and that's what you're experiencing in your everyday life. So think about what that means. You could be hearing how, the United States is on the decline, nobody wants to go to work anymore, there's no innovation, everything's going to hell. But I work in New York City and I work in Miami. All of my friends are extremely optimistic and very, very aggressive in either raising a ton of money for their startups, building businesses, or working for these big tech companies, or working on Wall Street, or trying to, invent incredible things in the biotech space. I have a lot of friends, and even one of my brother, works at this unbelievable health tech startup that's going to be doing amazing things. And people don't say, oh, the Fed funds rate's 5%, so I'm just going to go hide under my covers and eat MREs and eat canned beans and just give up. Human nature and the American way of life is to pursue what you want to do relentlessly, irregardless of the market conditions. So I would just say that to everybody. The media is going to push the fear. Now, some of the fear is real, right? I'm not trying to downplay it. But think about your activities in your everyday life. Chances are you're going to wake up and go to work tomorrow, right? Chances are everybody that's watching this live stream is going to wake up and go to work. It's not like everybody's just going to wake up and just give up and quit. You're probably going to work on building a business. You're probably going to, work on selling something, reaching your quotas, striving to do something. So that's not going to stop just because, Fox News or CNN says it's going to stop. Or the Democrats are ruining the country, or the Republicans and Donald Trump is your problem. It's just not real. So I don't know. I think I'm going to stick with Peter Lynch and the history of corporate earnings growth in America. And I think corporate earnings growth on average will continue to grow 8%. That's my thesis. Hey, D. Wood says, after the Second World War, Americans produced 50% of all manufacturing goods in the world. Yeah, well, now we're more of a services economy, And I think technology in and of itself has really made us that. Mimi's is concerned about the education system in the US, especially the quality of education for young people. I do agree with that, Mimi. Much like everybody else here, I went through the public school system. I think I turned out okay, but at the end of the day, it was a little bit of a horror show. Yeah, Tim says, after today, definitely don't listen to Fox News. Yeah, there was that record, we reported on that actually today in the live stream. There's a $787 million settlement I think Rupert Murdoch and News Corporation is going to have to pay. Now, here's the interesting thing about that. I don't really want to hammer on that too much, but usually those settlements are not disclosed. I'm actually kind of curious as to why those settlements were disclosed in terms of the amount. All right, let me catch up on some of the chats. Hey, Truth Teller says, people are so divided on small, insignificant issues. They can't see the forest through the trees. Left to right, we are all getting effed. We have to have way more in common than we think. Yeah, I guess, but also, to play the other side of that, here's the ideology that I subscribe to. I subscribe to the fact that there's a very, very loud minority on both sides. Most people that I interact with on a daily basis, and guys, I'm in New York City. This is the most liberal city on the planet, pretty much. So again, I interact with mostly Democrats. They're not these crazy people that you see on the news. That is the insignificant minority, just like the majority of Republicans are not all of these wackos that CNN blasts on the news about January 6th and all this stuff. Okay, that is the small minority, but it's a loud, small minority. I truly believe the vast majority of all of us, be conservative, Democrat, have more in common than we think. And I think it's just sort of what we talked about yesterday. I think it may have been Dan Zhang that said this. You got to follow the money, or you have to follow the money. And the media wants to sell advertising. And unfortunately, if you think about what gets the most views and the most clicks, is infighting, it's negative news, and it's fear. So I think that's what the media is throwing at us from both sides. So I don't know. But again, we'll check that out. The only other thing I have to say about today, everybody, because we're almost at the 2-hour mark. Where did the time go? Guys, home builders, again, Taylor Morrison Home, okay? New 52-week high, new all-time record high. Toll Brothers, new 52-week high. Pulte Group, new all-time record high and new 52-week high. We got housing start data out today. Housing starts for single-family homes. Hold on, my battery's about to die. Rose 4.4% in the Northeast, rose 23% in the Midwest. It was up 4.8% in the South, and the West is lagging significantly, down 16%. Now here's my prediction about Friday. Okay, here's my quick prediction about Friday. We are going to hear from the National Association of Realtors as they release existing home sales. I think existing home sales are going to increase yet again, but it's only going to increase in the Northeast, the South, and in the Midwest. I think you're going to see the West suffer existing home sale declines, because sometimes we could use all of these other indicators as leading indicators for these other reports. And if you think about last month, the National Association of Realtors, in terms of existing home sales and new home sales, almost every single part of the country was higher except the West. I think that trend is going to continue. And I think existing home sales is actually going to be higher because last month, interest rates on average for a 30-year fixed, I believe, was right around 6.3%. Obviously because of the banking collapse. So we'll see. Now look at this. You know, guys, is it just me, or has there been a ton of activity with the fire, FDNY today? I feel like these guys have been clanging and banging all over this place tonight. Anyway, all right, I'll leave you guys off with this. Keep your eyes peeled on the bond market, okay? I think the bond market will tell all. TINA is no longer in play. So TINA is the acronym. There is no alternative. There is an alternative now. Okay, the 1-year US Treasury is at 4.8% and rising. I think it's going to 5%. That's 5% risk-free rate of return on your money. The S&P 500 is at that critical 4,100 level. Let's see if we can get a pullback into the end of the week. And my friends, I'll see you tomorrow, 8:30 p.m. Eastern Time, live from New York City tomorrow night. We're going to talk about the big dog on Wall Street, Tesla, reporting earnings after the bell tomorrow. If you guys enjoyed the live stream, please feel free to leave a like on the video. Share the show with your friends. Click the subscribe button if you're new. Feel free to sign up for our free investing newsletter in the link in the description. And I will see you all tomorrow. So Lee, thank you so much. Out and about, my good moderator from Toronto, Canada. Thank you so much. Joan K, Steph UH, Hey, Terrell Brannon, thank you so much for joining. By the book, EBITDA, Hawaii. Austin City Limits, FredX, God bless you, my friend. Brick Stonewall, MBA Elias, thank you for all you do for the chat. I appreciate you. Solo Flyer, Sunshine After Rain, thank you as always. All of our moderators, you guys have been doing a great job. I appreciate you, and I do thank you so much. John Abraham, Muhammad, Michael Joseph, Joseph Hardaway, Joan K, Gary Carpenter, Luis Miguel, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere and you just need to know where to look. Guys, get some sleep. We got to be ready for Elon Musk tomorrow. All right, take care.